Analysts are highlighting the extent of increasing interest rates on the SME sector. The latest move being the shock 50 basis point hike last month, which took the repo rate to 7.75% and, most importantly, the lending rate to 11.25%. The country has seen 9 consecutive rate increases since 2021. Miguel de Silva of Retail Capital speaks to us now. Good morning, Miguel. Of course, it's the lending rate that is weighing heavy on the South African SMEs. We've had 9 consecutive increases in interest rates so far from the Reserve Bank. What's to be said about the current impact that's being felt?
Sure. And if you think about it, SMEs have managed to operate in a very difficult environment for a long time. If you think about since 2020, COVID had some severe trading restrictions placed on small businesses. Load shedding has been a factor for over 12 months and getting worse. Inflation is increasing input costs, and of course the interest rates just keep on increasing. But one thing has been quite clear is that small businesses have remained quite resilient in this process. They could continue to innovate, and they've been actually world renowned for that. And I see them as rising up to the challenge to beat this.
And it's that resilience that is needed, but it is tough times. And I'm interested in finding out about what avenues are there for the SME sector to maybe try and find buffers, especially when it comes to repaying their loans at such high rates.
Yeah, I think it's very important if they're under stress or they find it difficult to make repayments for the business loans, is to engage with their funder, either the bank or alternative lender, and speak to them. It's in the interest of the bank and alternative lender to keep these businesses active and continue to grow and to survive. So speak to your funder, make an arrangement. I think it's so important just to communicate where you are and be upfront. It's much easier to make an arrangement when you're engaging versus trying to avoid it, and then it becomes all fall down scenario.
Is this sustainable, though, given that you may not be making only one arrangement when you are in trouble? There needs to be a longer-term view when you think of loan repayments.
Yeah, no, definitely. You need to continuously look at your business across the board. So a key thing is always look at your expenses. Expense management is number one. Second of all, you need to look at your diversifying your revenue. So longer term, can you introduce new channels? For instance, e-commerce has been very, very successful for small businesses to opening up new customer channels, opening up new revenue streams. So that's in technology is very, very important in that. Looking at how you price for your customers, making sure that your base products are reasonably priced, but is the high cost products that you might have maybe priced a bit higher and pass it on to your customer. Customers do understand. You need to look at how you mitigate your load shedding, because that's also a long-term factor that's very important that you need to consider. There's a whole bunch of things that you need to be looking at about not only about interest rates, but more and more importantly about how you're being sustainable long-term is a big factor.
Interesting that you mentioned load shedding, because the Business Day is reporting this morning a Nedbank study that's seen 66% of the SME sector shedding jobs as a result of load shedding, and about 5% of the businesses that were surveyed having to shut their doors. With the impact of interest rates going up, that becomes an even further burden for the SME industry. How do we navigate ensuring that this sector does not cripple? Because we know that the first 2 years are quite crucial. We saw in COVID-19 that the pivot and maybe the change of a business model is what's needed. In this case, it's a different scenario altogether.
No, it's definitely small businesses need support. So we welcome the energy and incentives that government has put forward to move towards solar. I think businesses have realized that load shedding is here to stay. It's not going away, and you need to address that now. And there is incentives on the table now to take that on board and to make a difference. The government is offering 125% of the cost that you incur as a write-off in your first year. That's significant for small businesses. So it's around supporting the small businesses, realizing without these small businesses, South Africa won't grow. I'm sure you probably know this, but small businesses constitute more than 90% of businesses in South Africa. They contribute more than 60% of the labor force and 40% to the GDP of the country. So their survival is so important to the country, and it's actually where most job comes from, is from small businesses. So government must play a role in supporting them through supportive initiatives like the energy incentives. Alternative lenders and banks must support them in also facilitating moving towards alternative energy. And society overall needs to be supporting small businesses because they don't have the cash reserves and the manpower and the resources that big, large businesses have. So, yeah, you need to be supporting your small businesses as much as you can.
Lastly, is it fair to say that some businesses may not make it in this high interest rate cycle?
No, it's a reality. So when we're looking at our default rate in our business, the main reason is load shedding. It's just too severe, or it just makes the impact of managing your fixed costs, because even though you're unable to trade, you still need to pay those fixed costs, you still need to pay your rental. And for some businesses, that's just too much to handle. So unfortunately, we do see businesses folding because of that, and it's very unfortunate.
Miguel da Silva of Retail Capital talking to us about the impact of increasing interest rates on the SME sector in South Africa. That's how we wrap it up on the business desk for this morning. Gwen Amwabelo standing by with the latest in sport.